Yo, what is good, YouTube? We are back with another video. Today's video is going to be the unicorn model. We're going to be going over what it looks like and how to use it. If you guys are not in the free Discord, go join it. It is the first link down below. Other than that, we are going to get right into this. So the unicorn model is one of the highest probability models that ICT created, and it is a breaker paired with a fair value gap, right? So if we take a look right here, this is going to be your bullish unicorn, right? So what you need for a bullish unicorn is a swing low, a swing high, right? And then we come down and we purge the swing low. So after we purge this swing low, we are going to wait for displacement above this swing high and then a fair value gap created. This last up close candle right in this swing high leg right here is going to be your bullish breaker. Then you have your fair value gap passing, and this becomes your unicorn setup. The last up close candle paired with the fair value gap becomes the bullish breaker and the unicorn model, right? So the next one is the bearish unicorn model. So if we have something like this, like that, we take out the swing high, X, take out the swing high with a swing low here. It becomes the last down close candle in this swing higher, come up, tap into the unicorn with a fair value gap right here, breaker block here, and then continue lower, right? So what do you want to see with this model? You want to see a higher time frame key level tapped. So you want to first see a higher time frame key level tapped, and excuse me, and then what was I gonna say? Higher time frame key level tapped, and then you want to see an obvious draw on liquidity. So we have an obvious draw on liquidity. I forgot what I was gonna say. Obvious draw on liquidity, and then your unicorn, right? So these are the three things you want to look for: key level, obvious draw, and then the unicorn. That is going to be the unicorn model, right? So if we head into the charts, right? So first you want to say to yourself, where is the chart most likely going to draw to, right? So if we take a look at Friday, obviously we were bullish, right? Now another thing that's going to make this high probability is an SMT, right? So I'm not sure, did we have an SMT here? Oh, I already have it drawn out. Yes, we did have an SMT there. Let's remove all those drawings. So we have an SMT with Thursday's low. And if we take a look right here, we're on the 15-minute chart. We can see we purge a swing low. So we come down at 8:30, purge a swing low, form a higher time frame SMT, displace out of here. We have a fair value gap. Fair value gap paired with what? Your breaker, right? So right there, this is your unicorn model. Now, not all the time do we tap the breaker. Sometimes we don't tap the fair value gap. If the breaker's like up here, we won't even tap the fair value gap. But that's just given, right? The market's going to do whatever it wants. So we come down, tap into the fair value gap. If you want to risk here, you can have your stop like beneath this swing low, right? If we're in a unicorn model, we shouldn't violate the swing low that was purged, right? Then you can go for the draw on liquidity or a strict 2R, right? So right there, fair value gap breaker, that becomes your unicorn model. Tap into it at 9:30, and if you don't want to take your entry on the 15-minute, you can go down to the 1 minute, and then we set up a breaker right here, right? So we close above this swing high, we form a breaker. You can literally just take your entry somewhere here, risk off this swing low, because this breaker should support price to go higher, right? So there's example number one. Let's put that on the daily. Now here we are on the 5-minute chart, right? Now the one thing I do want to say is we have had really sloppy price action recently, and it was actually kind of hard to find these because the price action's just been very, very sloppy, right? So obvious draw on liquidity, we'd want to see higher, right? If we go to the 1-hour chart, we can see, yeah, we are continuously holding bullish order flow. We have a bullish 1-hour fair value gap, continuously holding. And we have an obvious draw on liquidity at this buy side if we continue to hold that. 4 hours, same exact thing. Continuous bullish order flow, right? So what happens here? We have an obvious draw at this buy side. We are chopping around, it looks like, right? But right here, we come down and we purge all of these lows right here. Right, so we can just mark this low because that was the obvious low that we have took. So right there, we have a fair value gap here. Now, what becomes your breaker throughout here? This candle here, last swing high before the impulse drive lower to take out sell side. This candle becomes your breaker paired with a fair value gap. Now, if you don't want to take your entry directly up here because the risk to reward would be skewed, right? Because you'd be risking off down here, right? That's a 1R, right? So if we want to take out our fib and measure from the previous swing low to the swing high and measure out 50%, we can do that, take our entry here. Now the RR becomes a 2R, right? So use your fibs and measure out equilibrium and then take your entry there if we have had a strong displacement, right? Comes down, holds equilibrium, chops around a little bit, and then we continue higher. Now I wonder, do we form an SMT here? No. Okay. Either way, right? Then continue to the draw on liquidity, right? But yeah, obviously it's 33 points because we are at all-time highs here, so that's a given, right? So next example, right? Get out a replay. All right, so for the next example, we're going to be taking a look at the 1 minute. Do we have a higher time frame key level? Yes, this low was purged. Right there, this low comes down, gets purged, and then we can go to the 1 minute and take a look here. Now, what's another thing that we see? I actually just realized this. We have highlighter, 1, 2, a 3 drives pattern, right? So we come down once, come up, drive second time, and then drive a third time. Then we get displacement out of here with a fair value gap. So we have a fair value gap. Do we have a breaker? Yes, it becomes this candle right here, right? Why does this candle become your breaker? This is the last swing high before we come down and we purge a low, right? So we purge this low with the 3 drives and into a hourly low, displace out of here, tap the breaker, tap the fair value gap, and we run all these highs up through here along with this buy side level, right? So very, very simple right there. Now I did have to cut something because I accidentally lost an example and I couldn't find it. So right here we're going to go over this one. Now if we take a look on the 1 minute chart here, we have a bearish example, right? Can you spot it? It's right here, right? So we come up, we purge these equal highs, right? So we have relative equal highs. Now if we take a look at the hourly, where are we? Oh no. So right here is another example, right? We are in continuous bullish order flow. If we take a look at the 4 hour, we can see we are in continuous bullish order flow, but we have came up, purged a swing high. Do we form an SMT? No, there's no SMT there, so can't use SMT. But what's one thing that you can do, right? What is this? Looks like we are setting what? A power of 3, right? So we have an accumulation. Where's the accumulation happening at? Above an old swing high, right? So we have an old swing high over here along with that one over there with those relative equal highs. And then we have a power of 3. So we accumulate here. We manipulate above these highs right here, purging this one. We come down and then we displace right here with what? A fair value gap, right? So what candle becomes the breaker? This down close right here, right? So this becomes your breaker. This becomes the fair value gap. This becomes your unicorn model, right? Now, what else? What happens? What time is it? It's lunchtime, right? So what could we do, right? Rebalance some of this, take out these equal lows, and possibly even come down here, which we did. So you can target these lows right here and then let runners down to these lows. So there's another example. Now the final example right here. Right, what do we see right here? If we have a 3 drives pattern, we do not need a higher time frame key level. So what do we see here? Not the highlighter, that's for sure. 1, 2, 3 drives. Displace out of here. Fair value gap here. What becomes your breaker? You can use these 2 candles or this one. I'd use that one. Becomes your breaker. You can set the long position on the breaker. So risk off right around here. Target these highs up here, right? Equal highs right there. Target those highs up there. So right there, 3 drives pattern with displacement out of here. Fair value gap, breaker, long, take out the highs. Right? So this is obviously, as you see, a very simple model to understand, super easy to use. And the next video we will do is going to be a back testing session on the unicorn model. So I hope you guys enjoyed this video, and I'll see you in the next one. Peace.